Hey buddies, how are you? I am Assistant Professor Kailesh Mulidhar Jaitwar. Welcome you all in this lecture which is for BCCA 7 student for financial accounting. In previous lecture we have seen various types of journal entries, how that can be made and how we can apply our logic to to make journal entries. And exactly on the same way we will going to discuss today also we will going to understand how we can make some other different type of general entries which are we have not covered in previous lecture, which I am completing in this lecture only. So please concentrate. There are a few entries which are not being discussed in previous lecture. So let us start with our question. There is one business and the business owner name is Mr. Hasmukh. Mr. Hasmukh has made various transactions in his business, and today we will going to make journal entries for his transactions. So what are the transactions? Let's have a look on our green board. So first transaction Hasmukh has made, that he introduced cash rupees 50,000, furniture 20,000, building 5 lakh, laptop 40,000, and MV means motor vehicle 40,000. So this is our first transaction where Hasmukh has introduced cash 50,000, furniture, building, laptop, and motor vehicle. And these all things has been given by Hasmukh to the business. That means cash, furniture, building, laptop, and motor vehicle is coming into the business. Cash is real account, furniture is real. Why real? Because cash, furniture, building, laptop, and motor vehicle all are assets. And the golden rule for asset, that means for real account, is debit what comes in. And dear friends, these 5 things are coming into the business. So we will going to debit all these things. Why? Because debit what comes in. On first transaction, cash is coming in, so cash account will be debited and amount will be 50,000. The other one, furniture account will be debited with rupees 20,000. Building account debited with rupees 5 lakhs. Laptop account with rupees 40,000, and in last, motor vehicle account debit with rupees 40,000. This all are we have debited. Why? Because these all are asset, and when asset comes to the business, that time we have to debit that all assets. So this all are the assets and these are coming in, that's why that will be debited. So what will be credited then? The person who has given these things. So Hasmukh has given us these things, so Hasmukh is giver, and personal account says debit the receiver, credit the giver. So we will going to debit Hasmukh. No. Why? Because we will not going to take name of Hasmukh here. We will write instead of Hasmukh the capital account. So here to capital account, and capital account will be credited with the combination, with the combined effect of these 5 things. So you have to sum all 5 things. So 50 and 20, 70 and 40, 1 lakh 10, 1 lakh 50 and 5 lakh. That means 6 lakh 50,000. Okay. 70, 570, 570, 610 and 650. This is how you can make journal entry for this type of transaction. and you have to mention here narration. What we can write in narration? I am not writing here narration because there is space, we have scarcity of space here, that's why we are not writing here narration. So what you can write in narration section? You can write Mr. Hasmukh, being Mr. Hasmukh has provided these things. Okay, so this is how we can complete our entry here. You have to make entries in this format only. You have to write the heading like general entries in the books of Mr. Hasmukh on the entries where on the this will be heading for these columns. Okay, so we will provide our focus to second entry, and that is purchase goods worth rupees 50,000 for Mr. C, from Mr. C. So we have purchased goods from Mr. C. So we are purchasing, that means purchase means my expense, that means that will be debited. And Mr. C is here debit, receiver or giver. Mr. C is giver here, that's why personal account sets there, debit the receiver, credit the giver. So purchase account will be debited, purchase account will be debited to Mr. C account, and amount will be rupees 50,000. So 50,000. Your question is only on this this part. You have to concentrate on your question by taking screenshot of this part. You can take screenshot of this, and by watching this all questions you can make your own general entries. So this is how we can conclude this entry, and narration will be being goods purchased from Mr. C. Why we haven't credited cash here? Because we haven't provided cash to Mr. C. That means this is credit transaction, that's why Mr. C account will be credited. Okay, so we have completed 1 and 2. The third one will be paid rent rupees 2,000. Rent is my expense. So rent expense, and nominal account says debit all expenses. So rent will be debited. So rent account will be debited with rupees 2,000. With rupees 2,000 to cash. Why? Because cash is going out, and cash is going out, that means real accounts rule says debit what comes in, credit what goes out. So cash is going out, that's why cash will be credited, and narration will be being rent paid. Okay, we have completed third one. Coming to the fourth one. Fourth one is saying goods sold of rupees 1 lakh to Mr. D. We have sold goods to Mr. D of rupees 1 lakh. So what will be the entry? We have sold something, that means sales account, and selling means income. So nominal account says debit all expenses and credit all income and gains. So sales is income, that's why sales will be credited. So what will be debited then? We have to debit Mr. D's account. Why? Because Mr. D's personal account, and personal account says golden rule for personal account says debit the receiver, credit the giver. We are selling something, that means we are giving and someone is receiving. That means Mr. D is a receiver of goods, and that's why we have to debit Mr. D. Why? Because debit the receiver. The rule of personal account says debit the receiver, credit the giver. So Mr. D is receiver. That's why Mr. D's account will be debited with rupees 1 lakh. With rupees 1 lakh to sales account. Why sales? Because sales is my income. Okay, this is how we can make entries for sales account, credit sales. We can close this now, and narration will be being goods sold to Mr. D. Okay, fourth one is done. Fifth one, purchase return of rupees 5,000. Purchase return means see, if we are purchasing something, there might be something which might be damaged, or the unrequired product which we have received, and we have to return to our supplier. So we have purchased goods of 50,000 from Mr. C. Now connect this transaction with this transaction. You have to connect second and fifth. So purchase goods 50,000 from Mr. C. Now we are returning, purchasing return. We are returning to Mr. C. We are returning. When we have purchased something, that time we have debited purchase. Now if we are returning, then the case will be vice versa. When we have purchased, that means purchase account will be debited, but we have returned now, so purchase account will be credited. So here, instead of writing purchase account, we will write purchase return account. So purchase account was debited here. Now we will going to credit purchase account by the name of purchase return account. And now what will be debited then? We will going to debit Mr. C. Why? If we are returning something, we are returning, that means we are giving something, that means someone will receive, and who will receive? Mr. C. That means Mr. C will be receiver of goods. That means personal account says debit the receiver, credit the giver. That's why we have to debit Mr. C's account. Mr. C's account we have credited at the time of purchase. Now we are debiting at the time of return, because we are contracting this entry. Account will be debited with rupees 5,000 to purchase return account. Purchase return account. Okay, and amount will be same, 5,000. This is how you can make journal entry for purchase return. This entry is new for you. We haven't discussed this type of entry in previous lecture, hence you have to consider this entry as a very important portion in this video, and you have to watch again and again if you have not understood. Okay, coming to the sixth transaction, fifth complete. Sixth, commission received. REC means received rupees 800. We have received commission. Commission received, that means commission is my income, and nominal accounts rule says debit all expenses and losses, credit all income and gains. So commission is my income, that's why commission will be credited. And what will be debited then? Something we have received in form of cash, or in form of bank, or in form of NEFT. Ultimately we are receiving something. Here nothing is given, that means cash will be given to us. So cash is coming in. We have received income, that means cash will come to the business. So cash is coming here. So cash is coming means debit what comes in. Real account rule says, that's why cash account will be debited with rupees 800 to commission received account 800. This is how you can make entries for receiving commission. Then coming to the seventh entry, borrowed money from Mr. F. We have borrowed money from Mr. F. That means Mr. F will provide sum of money to us. That means cash will come in or will go out. We are receiving loan from someone. That means someone will provide loan to us. Someone will provide loan to us means that person will provide cash to us. So cash will be coming in. So we have to debit cash. Why cash? Because cash is coming in. So cash account will be debited with rupees. Okay, amount is not given here. Let's say this is 10,000. So we have to write here 10,000. We have received loan. We have received loan from Mr. F. That's why cash is coming in. Cash is rupees 10,000. That's why cash will be debited. And who is giving this amount? This amount is given by Mr. F. Mr. F is giving amount. That means Mr. F is giver here and Mr. F is giver here. That's why we have to apply personal accounts rule, and personal account says debit the receiver, credit the giver, and Mr. F is giver here. That's why we have to credit the giver account, the Mr. M's account, Mr. F's account. Amount will be same as 10,000. Okay. Done. If you have any doubt, you can pause and replay video. And even if you are not getting these things, you can tell me to take a doubt clearing session. Okay. So 8th entry. Machinery purchased rupees 70,000. Machinery purchased. We have purchased a machinery for our business. First, machinery is asset for me, and when we will going to debit or credit asset, rule says debit what comes in. We are purchasing machinery, that means machinery will come to the business, that will enter into the business. Okay, so you have to debit machinery. Why? Because machinery is asset, and assets rule says real accounts rule says debit what comes in. So you have to debit machinery. So machinery account will be debited with rupees 70,000 to we are purchasing something, that means we have to pay for that thing which we have purchased. We have purchased machinery, and for machinery we have to pay something, and what we will going to pay? We will going to pay cash. So cash is going out, that's why cash will be credited with rupees 70,000. Okay, this is our 8th entry. How you can write narration here? Being machinery purchased for rupees 70,000. Okay, we have completed again 8th. Now we are on 9th. Goods worth rupees 10,000 returned by Mr. D. So exact like these two, the 2nd and 5th, the 4th and 9th is connected because of Mr. D. Mr. D and Mr. D. What was the 4th transaction? Goods sold to Mr. D, and here Mr. D is returning goods worth rupees 10,000. That's why there will be contra entry for this transaction, for 4th transaction. Okay, so at the time of selling we have passed journal entry, the 4th one, Mr. D account debit to sales account. Now we are receiving from Mr. D. We are receiving, when we have given to Mr. D, we have given this entry. Now Mr. D is returning back money, returning back goods. So we have to return back money to Mr. D. So this 4th entry will be taken as base for our 9th entry. So we have credited sales at the time of selling of goods, and at the time of sales return we have to debit sales. So sales account will be debited, but instead of sales account we have to write here sales return account. We will write here sales return account will be debited with rupees 10,000 to Mr. D, to Mr. D's account, 10,000. You can see 4th entry is connected with 9th one. Why? Because this is contra entry for this. Here we have credited sales, we have debited sales written here. We have debited Mr. D, here we have credited Mr. D. And exact like in this, this one, we have make contra entry for 2nd and 5th. So second and fifth is connected, and fourth and ninth is connected. Okay. So coming, how you can write narration for this? You can write narration like being sales, being Mr. D returned goods to us. Simple. Okay. So this is the scene for 9th. Now what will be the entry for 10th? This is also the one of the entry which we can be asked in our exams. Sales return, purchase returns and drawings are favorite entries for valuers. So you have to concentrate on these entries. Okay. So we have completed 9. Now on 10th. Mr. Hasmukh withdrawn rupees 5,000 for son's college fees. Son's college fees. Mr. Hasmukh has withdrawn rupees 5,000 for son's college fees, and we have to record transaction in the books of Mr. Hasmukh's business. Okay. Shops, and this in the books of Mr. Hasmukh's business account and not in personal account. Mr. Hasmukh means this is business account. This is business account and not personal account. These all expense relates to business, not to Hasmukh. So we cannot consider here personal transaction of Mr. Hasmukh. So this is a very simple thing which we can see here. Mr. Hasmukh has taken 5,000 for his personal benefit, for his personal transaction, which not belongs to business. Son's college fees does not belong to business. That's why this will be treated as personal expense and not as business expense. So what will be entry then? When Hasmukh has provided cash to the business, what we can debit or credit? We have to debit cash account and to capital account. Cash account debit to capital when Hasmukh has provided cash. Exact opposite entry when we will see these types of cases. Why? Because at the time of giving of money, cash to capital, and at the time of receiving or taking of money from business, that this entry will be opposite. So we can write here capital account debit to cash, but instead of capital account we have to write drawing account. So drawing account will be debited with rupees 5,000 to cash. Why cash? Because Mr. Hasmukh is withdrawing 5,000 from our business. That means cash will go out from our business. Cash will outflow from our business. So that's why cash will be credited. Why? Real accounts golden rules principle says debit what comes in and credit what goes out. And what narration you can make here? Debit. What narration you can make here? Being amount withdrawn by business owner, by Mr. Hasmukh. Okay, this is all about this transaction. Let's see how much time we have, and after that if we have time we can proceed further. Okay, we have 5 minutes, so we can take one entry again, which is not here. Just I am telling you. I am taking entry for loss of asset. So let us have a quick look on these types of journal entries. But before going to proceed further, how we can conclude this problem? We have to conclude this transaction by totaling all debit side, total of debit side, and here credit side. You can calculate by your own these all and these all. you can write here, and calculation of this, the sum of this you can write here. Okay, so we have finished with this transaction. One more important entry which can be very essential for you, and what the transaction might be here is, I am today I want to tell you about the event and not about the transaction. We have purchased machinery, this is transaction. Commission paid, commission received, rent paid, rent received, all are transaction. But if you have lost something from your business, that's not the transaction, that one is event. Okay, so if we are dealing in textiles, so once what happened, fire caught in our showroom, and we all types of clothes were burnt out. So this is not the transaction but the event. So this is not the transaction but the event, but this is important thing for business which we have to record, which we have to show in our business. So how we can write, how we can book this loss in our business. So how you can make book this loss? So think, if you have textile business, that means all textiles are goods for you. That means when you purchase something, when goods enter into business, we debit purchase, and when it goes out, we credit sales. So here we will going to discuss how we can make journal entry for loss by fire. So loss by fire means this is extreme loss for business, and account for loss is nominal account. Why? Because nominal account deals in expenses and losses, income and gains. So debit all income and expenses, so loss will be debited. So how we can make entry? We can write here like this: loss by fire, account debited. Let's say amount is rupees 7,000. To what can be credited then? We will going to credit here trading account. You haven't studied trading account, hence you will not going to understand this entry. But to make sure this entry, you can write here goods lost by fire, and ultimately this account will fall under trading account. That's why trading account will be credited. So this is how you can make journal entry for your losses. That means for event, and any type of event can be recorded in this same manner. So this is all about today's lecture, and in next lecture we will going to discuss more journal entries. After that we will slowly proceed to the creation of ledger. But before that, I want to give you homework which I will be giving on your WhatsApp group. So to show me your homework, you can give me the pics of your short question, which will I will going to tell you about this, how you can make your homework and how you can submit homework on your Google Classroom. So stay tuned to our channel and stay tuned to my lecture to get more knowledge, and thank you for this thing. Okay, thank you.